How One Family is investing in a better tomorrow. We're owned by our members for our members, so we can reinvest our profits to benefit them and the causes they care about, rather than paying shareholders. Our vision is all about inspiring better futures by fostering financial resilience, improving access to education and enhancing life opportunities, which is why we provide funding to support our members and communities that need it most. Since 2015, we've donated over £4 million. Over 350 fantastic causes have benefited from our support, including homeless charities, food banks, schools, and many more. We've improved the lives of over 3,000 people through our individual grants. And we believe that education is a key foundation to unlocking future opportunities. So, we award young persons education grants to help towards the essential costs of learning, and donate laptops to local schools and community groups to support education and provide online access. We also work with local charities to provide mentoring and apprenticeships, creating opportunities for people to develop their skills. We have a long history of growing and protecting value for our members, ensuring they have their say in key decisions, providing extra support for those who need it, and offering products with low minimum contributions, so they're accessible to all types of savers. Our colleagues are important to us too. We're committed to their well-being and development, actively encouraging them to be themselves. From promoting our diversity and inclusion strategy, to working together to support Brighton and Hove Pride each year. Ensuring our colleagues feel supported and listened to means they can do their best by our members. We're all individuals, and we share the same planet, so where you decide to invest could affect us all, now and in the future. At One Family, we're committed to helping you find a home for your money that's sustainable for everyone. How? By developing products that responsibly contribute to building a better world. Investing in things like climate-friendly funds, which are more ethically and sustainably focused. And with over 45 years of experience, we're experts in family investments. We like to remember that we're part of a much bigger family, which includes you. One Family. We're better together.
Good morning and a very warm welcome to the One Family 2021 Annual General Meeting. As Chair of the Board of Directors, it's my pleasure to be hosting today's event, and I'm pleased now to introduce my fellow board members. Executive Directors Teddy Nyahasha, Jim Islam and Nikki Audlam Gardner, and my non-executive colleagues Graham Lindsay, Sally Williams, Steve Colsell and Jackie Noakes. I'm really sorry that the circumstances caused by the COVID-19 pandemic again mean that you cannot join us today in person. Last year, you may recall that we were not able to offer any interaction with members during the AGM itself. This year, however, those of you who've logged on to the meeting live online will have the opportunity to submit questions and to vote on the formal resolutions set out in the Notice of Meeting booklet that you've already received. A word about the online system. On your screens, you will see that there is a function you can use to submit questions. We will answer as many of these as practical, as well as questions submitted before the meeting. If you do raise a question and we don't have time to answer it today, we will nevertheless send you a written response after the meeting. There is also a voting function which will be available for you to use when we come to the resolutions that are being considered under the formal part of this meeting. I will explain more about how this works when we reach this point. Moving on to today's agenda, I shall start with a few remarks about the economic environment and its impact on our business and our members. Following this, our CEO, Teddy Nyahasha, will give an update on what happened in the business last year, as well as outlining our longer-term strategy and plans. Our CFO, Jim Islam, will then present a deeper dive into the 2020 numbers. Following these short presentations, we'll move to the live section of the meeting, starting with your questions and answers. We will then move into the formal part of the meeting and receive your votes on the 14 resolutions we're presenting today. While the votes are being counted, we've organised a short video presentation by Holly Mackay. Holly is founder of Boring Money and is a well-known financial commentator. She will share with us her jargon-free perspectives on the importance of investing for the individual and the planet. Like One Family, Holly is passionate about democratizing investment. Finally, I will announce the results of voting by members on this year's resolutions. And after this, the meeting will close. It would be difficult to start comments on the current environment without discussing the coronavirus crisis. When I spoke to you last year, it was not possible to predict the human cost of the pandemic and the economic fallout from a year of lockdowns and social distancing. And I know from the feedback we've received from many of our members during this period how challenging life has been for many families. I would like to extend my personal sympathy to those of you who've experienced bereavements and serious illness in your families over the last year. I'm proud that despite everything the year threw at us, the One Family team reacted swiftly and decisively to prioritise the needs of our members and customers and the well-being of our colleagues. In particular, we continue to offer high levels of customer response and service. We supported customers who struggled to make payments to their policies. We set up hardship grants to help members and their families through this difficult time. And we provided funding to community organisations which have been supporting the vulnerable during the pandemic. The pandemic has, of course, overshadowed all aspects of the UK economy, with significant stock market falls in the early part of last year, which have impacted those of you with policies linked to underlying investments. The markets recovered partially in the second half of the year, and this has continued into 2021. Buoyed by the vaccination rollout and the stimulus to the economy, with expectations of a rebound in corporate earnings and GDP through the second half of this year. As you know, the transition period for Brexit concluded at the end of 2020 with the agreement of a trade deal between the UK and the EU. While some consequences remain uncertain, we have not seen the seismic impact on the economy that some had predicted. And we believe that many of the downside risks have been factored into markets already. Finally, overall, through the turbulence of the last 18 months, I want to reassure you that One Family has remained financially resilient through this economic uncertainty. We believe that our strategy, with its focus on protecting our members' value and enhancing sustainability of the business, will ensure that we remain financially strong and relevant for the future. At the beginning of 2020, we set out a new vision for the business, Inspiring Better Futures. Critically, this vision focuses not just on One Family continuing to offer good value products and excellent service, but also emphasises our role in supporting our members and the wider community. We believe this is entirely consistent with our status as a mutual organisation and our longer-term sustainable approach. Social mobility and inclusivity have always been at the heart of our business, ensuring that our products are accessible to allow all customers to save for the future and to protect their families. The One Family Foundation has now given over £4 million to good causes nominated by our members since its launch in 2015. This year, we're focusing this funding to help young people access educational opportunities and to support charities and organisations which create better futures for those in our communities. We are also committed to influencing environmental and social change through our investments. Notably, in 2020, we've launched climate impact funds for our ISA and our lifetime ISA customers. Teddy will outline more on our ESG strategy in his presentation. Being member-owned remains at the heart of our business, and we continually look for new ways to enhance the value of One Family membership. Last year, we ran a pilot to identify the type of benefits that appeal to our membership. And this year, we're using the insight from this and our research to develop an exciting new member benefit offering, which we'll be sharing with you later in the year. I'm now going to hand over to our Chief Executive Officer, Teddy, who will give you more detail on business developments during 2020 and progress so far in 2021.
Thank you, Chris. As the Chair has mentioned, 2020 has been largely defined by the COVID-19 pandemic. However, we shouldn't let it detract from the significant achievements that we've made during the year. Our focus has continued to be the long-term sustainability of one family, not just the here and now. Our new vision, Inspiring Better Futures, brings our strategy to life. It illustrates how we will positively impact the futures of our members and customers, our colleagues, our communities, and the world at large. Chris has mentioned that throughout 2020, One Family remained strong and resilient. But what do we mean by that? Well, there are two key aspects: our financial resilience and our operational resilience. Our financial resilience is demonstrated through our continued strong capital coverage ratio and capital surplus. Despite the falls in stock markets and interest rates, we continue to have over twice the capital required by our regulators. What we mean by operational resilience is that despite having to make significant changes to our ways of working, we've still been able to effectively run our business and serve our members and customers. Key to this was ensuring that all customer data remained secure regardless of where we were working from. And I'm pleased to say, as a result of our swift action and colleague support, we were able to maintain our high customer service satisfaction scores throughout the year. From September 2020, the first of our Child Trust Fund policies started to mature. As the UK's biggest Child Trust Fund provider, this is something we'd carefully planned for. We worked hard to ensure that these young adults have a smooth journey with us as their policies mature, whether they choose to withdraw their money or reinvest it with us. For those reinvesting, there's the choice of a new stocks and shares ISA or a lifetime ISA, which allows policyholders to save for their first home or use in later life. As part of these product offerings, we work closely with our investment manager to develop 2 climate change funds, which members can choose between. These funds invest varying proportions in companies that will have a positive impact on our planet. During 2020, we continued to enhance our range to provide members and customers with the products and services that they need across all stages of life. A premium flexibility feature was added to our over 50s insurance product, and our lifetime mortgage team amended their business model to ensure it could operate in a COVID-secure environment. We see our role to be more than just that of a product provider. We want to support members where we can and be part of a community that can be relied upon in difficult times. Our vision, Inspiring Better Futures, illustrates this. But it's not just talk. For example, we've been at the forefront of a campaign to reduce the legal burden on vulnerable young adults accessing their Child Trust Fund money. More examples are shown on this slide and are mentioned in the Inspiring Better Futures video, which you may have seen before the AGM started and will be shown again at the end of this meeting. What's been happening in 2021? Jim Islam, our Chief Finance Officer, will talk shortly on how economic markets have improved in 2021 and the impact on our business and the funds we manage. But I'll focus here on strategic matters. 2021 sees us further expanding our products and services. We've already extended the availability of our new stocks and shares ISA to all customers, not just those with maturing Child Trust Fund policies. We've also expanded our sales team to work with existing customers to remind them about the features of their product and other ways we can support them and their families. Additionally, discussions are ongoing with our investment managers to see how we can increase what's known as environment, social, and governance, or ESG aspects of our other investment funds. We continue to make good progress on our IT modernization program. Key to this is a consolidation of the policy systems over the next few years, which will result in a better experience for our customers and also increase efficiencies for the business. And all this adding to the long-term sustainability of One Family. I'll now hand over to Jim Islam, our Chief Finance Officer, for a closer look at our 2020 results and also market developments in 2021. Jim.
Thank you, Teddy. I'm now going to take you through the highlights of our 2020 results and also explain how market improvements to date in 2021 have impacted the funds which many of you may be invested in. As Teddy explained, despite the fall in stock markets and interest rates, One Family remains financially resilient. We monitor our capital coverage throughout the turbulent markets and falling interest rates of 2020 and gained comfort that our approach to capital management has resulted in a resilient coverage ratio. I'm pleased to say that our non-profit fund capital coverage ratio stood at 209% at the end of 2020, more than twice the regulatory capital requirement, with excess capital in this fund of £77 million. Our operating profit, which measures the underlying performance of the business before the impact of market volatility and other one-off non-controllable items, improved by £8.6 million to £10.8 million. This was largely as a result of a reduction in operating expenses, which can also be seen on this slide, through a continued focus on operating efficiencies. Operating efficiencies not only aid our in-year result and operating profit, but also help ensure that you, our members, have a smoother interaction with us. We appreciate that we need to do more on this, such as allowing online servicing of your policies, and our modernization program will deliver these efficiencies for both you and our business. Where the falling markets and interest rates have had more impact is on our statutory result and retained earnings. We experienced an in-year impact of £13.8 million, which reduced our retained earnings to £143.7 million. I should point out that much of this is due to the formulaic impact of movement in interest rates and unrealized impact of market movements. As long-term investors, we can ride out these short-term fluctuations in markets. Therefore, with the market improvements already seen in 2021 and expected in the future, these unrealized investment losses should be reversed. Our income levels saw a very slight decline in 2020 compared to 2019, largely due to the reduction in income from lifetime mortgages. Our total funds under management increased in 2020 despite the fall in stock markets. This was due to the increase in ISA sales through our partnership with the Post Office. We have spoken about the impact that markets had on us as a business in 2020. But for members whose policy is linked to the underlying assets, this meant a fall in the value of your holding. We fully appreciate that this is concerning and may tempt customers to stop saving or convert their policies into cash, if this is permitted, but I would like to stress that investing in stocks and shares is typically for the longer term. As we have seen in 2020 and continue to see in the volatile markets, investment values can fall as well as rise. But over the longer term, stocks and shares have historically grown more than cash accounts. This is illustrated in this graph, with the black line representing global equities and the yellow line representing cash. My final slide shows how the prices of our two largest funds have moved since the start of 2020 up until the end of April 2021. This reflects the improvements we have seen in markets since the end of 2020 and affirms the long-term nature of stock market investments. For our customers in these funds, this means that the falls that you saw in your fund values during the course of 2020 have now reversed, and they are showing signs of growth compared to the end of 2019. Thank you for listening, and I would now like to pass you back to the chair.
Good morning again, everyone, and I'm delighted to be connecting with you now live from our office in Brighton. Thank you very much to Teddy and Jim, who joined me today, along with my fellow directors Nikki Aldlam-Gardner and Graham Lindsay. Other members of the board are attending online. I'm now going to move on to the question and answer section of the meeting. As I noted earlier, we've also had a number of questions submitted to us by members in advance of the AGM. Thank you to those of you who have posted questions today via the Q&A function. We will try to address as many of these as possible, but we will also be providing written responses after the meeting. To begin, I want to give a brief explanation of the rule changes which we're asking members to vote on in resolutions 12, 13 and 14. These changes have been passed by the directors on behalf of members and are valid until the end of this meeting. If they were not to be approved by members today, the relevant changes would fall away and be replaced with the previous equivalent rules. The first set of rule changes, contained in Resolution 12, permit the Society to hold general meetings as virtual events, physical meetings, or hybrid meetings, where members can attend in person or online. The board believes that this flexibility will enable meetings to be held in the most appropriate format according to the circumstances at the time, and enabling as many members as possible to attend by different means. The second set of rule changes, which form Resolution 13, amend the requirements for advertising notice of general meetings in national newspapers from 2 to 1 newspaper. This is in line with the requirements of the Friendly Societies Act, and this change will also save members about £9,000 a year. The final set of changes we're presenting as Resolution 14 are to modernise some of the terminology in the rules by replacing references to chairman and vice chairman with chair and vice chair, respectively. So on to questions. We've received a few questions from members about directors' remuneration, and I'm now going to hand over to Graham Lindsay as chair of the Remuneration Subcommittee to provide some responses.
Yes, thank you, Chris, and thank you to those members who've submitted questions on this important topic, including Mr. Tai, who asked why pay awards are made and agreed in-house rather than by an independent committee, and to Mr. Watmo and Mr. Homer, who questioned the level of payment made to directors and executives. So remuneration awards are set internally in common with practice at other financial services organisations and including many mutuals. The board sets the remuneration policy and the remuneration subcommittee retains oversight of the structure and size of those awards. Committee members consider advice from external advisors and external market benchmarking data in making those decisions. Importantly, the remuneration subcommittee comprises independent non-executive directors only, with no director being involved in setting their own remuneration. EY, our external advisors, and external market benchmark data provider Willis Towers Watson are used to ensure that those remuneration awards are in line with market practice, and indeed, we engaged them to carry out an updated benchmarking exercise during the 2020 award process. All executive remuneration has been designed to motivate and reward the delivery of the One Family strategy and to remain competitive with the wider financial services industry. Remuneration is aligned to members' interests by rewarding against stretching criteria that includes customer service, product performance, and our financial strength. And being able to recruit and retain the best talent with appropriate reward packages will enable us to continue to grow our business and to increase member value. And I think it's also worth adding that in response to the pandemic, Our Chief Executive, Chair, all board members and the wider executive team all took voluntary salary and fee reductions in 2020, and those funds were given to the Foundation to help support those who were most in need. And I hope that answers those questions. I hand back to you now, Chris.
Thank you, Graham. We know that many of our members are interested in our environmental, social and governance strategy. And Mr. Lawrence contacted us to ask what the Society is doing to help combat global warming and to reduce our carbon footprint. As you heard earlier in the meeting, the Society has been progressing a number of initiatives in this important area, and we will continue to do so. Through our customer investments, we've challenged our fund managers to influence the companies we invest in to make improvements to their carbon impact and their diversity records. In 2020, we launched 2 climate impact funds with specific targets for reducing carbon intensity. These are currently available for our Lifetime ISA and LISA customers, and we look forward to opening them up to further customers in due course. Through the One Family Foundation, the Society has given over £4 million in grants to causes nominated by our members over the last 5 years, and many of these are directed to have an ESG impact. We're also careful to manage our carbon footprint in our offices through recycling, energy conservation, and energy efficiency actions. Our member Karen Adam has asked about the competitiveness of One Family's product pricing, expense ratios, and how we would encourage members such as herself to remain with One Family. We believe that our products represent good value and in particular support an inclusive approach to financial services and investments. For example, our Junior ISA allows regular contributions at much lower levels of monthly payment than most of the providers in the market, thus making it easier for those with lower disposable incomes to make regular savings. In order to continuously improve the competitiveness of our products, we also have a strong focus on efficiency in the business. You will have heard from Jim that our operating profit in 2020 has shown a strong improvement over the prior year, driven largely as a result of a reduction in our operating expenses. Whilst in-year profit is one financial measure, our capital position shows the strength and resilience of the Society. As Jim noted, this has remained at over twice the regulatory requirement, despite the turbulent stock markets and falling interest rates of 2020. And finally, as to how we would encourage investors to stay with One Family, I would emphasise the simple and straightforward nature of our investment proposition, our transparent approach to charging, and the fact that customers are able to service their products online or via our UK-based call centre. I'm really pleased to report that our call centre and other customer service measures have remained at very high levels despite the pandemic. I'm now going to start the formal part of the AGM. The 14 resolutions this year will appear on your screens, and you will have 10 minutes to cast your votes on all the resolutions. You can cast your votes from now, and they will be submitted when voting closes. You will see a notification when you have 1 minute left, and a further notification when voting closes. Your votes will then be included in the results that will be prepared by Civica Election Services, who are acting as scrutineers at this meeting. Simon Alford, our Company Secretary, and Dawn Waller, another colleague at One Family, are members of the Society and have confirmed that they are happy to propose and second the resolutions that are being presented to you today on behalf of all members. I can also confirm that your board recommends that members vote in favour of all the resolutions being considered today. So moving on, the first resolution is to receive the financial statements of the Society for the year ended 31st of December 2020. The second resolution is to approve the Directors' Remuneration Report for the year ended 31st of December 2020. I should note this is an advisory vote, the results of which will be taken into account by the Remuneration Subcommittee when considering future remuneration arrangements. As the next resolution concerns my own re-election, I'm going to hand over to our Vice Chair, Graham Lindsay.
Yes, thank you, Chris. So the third resolution is to re-elect Christina Margaret McComb as a member of the Board of Directors. As Vice Chair and Senior Independent Director, I can confirm that in line with best governance practice, Chris has had an annual performance evaluation and is considered to be effective in her role and committed to making available the appropriate time for board meetings and for carrying out her other duties effectively. Back to you, Chris.
Thank you, Graham. Resolutions 4 through to 10 are for the re-election of each of my fellow board members. I can also confirm that in line with corporate governance best practice, all the directors have had annual performance evaluations and are considered to be effective in their roles, and to be committed to making available the appropriate time for board meetings and for carrying out other duties as directors of the Society. The fourth resolution, therefore, is to re-elect Stephen James Colsell as a member of the Board of Directors. The fifth resolution is to re-elect Graham John Lindsay as a member of the Board of Directors. The sixth resolution is to re-elect Jacqueline Dorothy Mary Noakes as a member of the Board of Directors. The seventh resolution is to re-elect Sally Angela Helen Williams as a member of the Board of Directors. The eighth resolution is to re-elect Nicola Ciel Audlam Gardner as a member of the Board of Directors. The ninth resolution is to re-elect Jamshid Jim Islam as a member of the Board of Directors. And the 10th resolution is to re-elect Shingarai Tadeus Teddy Nyahasha as a member of the Board of Directors. The 11th resolution is to reappoint KPMG LLP as auditors to the Society for the year 2021. As I noted before, resolutions 12, 13 and 14 are in respect of rule changes. If any of these resolutions are not passed by members today with the required majority, the relevant words from the previous rules dated the 14th of May 2018 will be reinstated. The 12th resolution, therefore, is to approve changes to the Society's rules passed by the Board of Directors to enable virtual general meetings to be held as reflected in the rules of the Society dated the 1st of April 2021. The 13th resolution is to approve changes to the rules of the Society passed by the Board of Directors to amend the requirements for advertisement of notice in national newspapers, as reflected in the rules of the Society dated the 1st of April 2021. And the 14th and final resolution is to approve changes to the Society's rules to make minor changes to modernise the rules as reflected in the rules of the Society dated again the 1st of April 2021. That completes the resolutions for this year's meeting. Again, you can continue to vote on the resolutions for another few minutes, whilst hearing from our guest speaker, Holly Mackay, who's a financial expert, a commentator on investment markets, and the founder and managing director of Boring Money. I'm delighted to welcome Holly to our AGM today. Voting will close during Holly's presentation, and after it's finished, I will present the results. Over to Holly.
Hello everyone, my name's Holly Mackay and I run a business called Boring Money, which I set up to help people make better choices about their ISAs and their pensions. I also sometimes write about investments for various papers, and in my spare time I'm a mum to an 11-year-old and a 13-year-old. And let me say, I definitely find investing much less complicated to understand than teenagers. On that note, one family have asked me to say a few words today about what I see when I look at investment markets at this really odd point in history. I want to say a few words about risk and then touch on sustainable investing. Now, since March last year, we've all been forced to think about risk and trade-offs more than ever. What are the risks of taking certain actions? What could happen to me and my family? Driving home about a month ago, I heard a professor on the radio talking about the risks of the AstraZeneca injection, and he said that we were all worrying about the wrong question. Instead of worrying about the risk of actually having the injection, he said we should instead be asking ourselves about the risks of not having the injection. Now, we've all had to think quite hard in terms of health and risk over the last 12 months. I think many of us need to also reconsider how we think about risk in financial terms too. When I heard that professor talk about vaccines, I thought his words really resonated in terms of investing too. Many of us, of course, find investing worrying. There's no script, there are no guarantees, and we certainly don't know what the future holds. And like health, it's a big deal because the consequences of making a mistake are significant. But there is a but. Many of us, and I particularly address this to younger viewers today, should arguably not be asking simply what are the risks of investing, but actually what are the risks for me of not investing. Now, here's something I do know to be a fact. Interest rates on our cash are at historic lows. They're actually less today than inflation is. So we know that the value, the purchasing power of our cash is very gradually sliding backwards. So for anyone with timeframes of 5 years or more, I think they should be at least considering the stock market. Now, behind all the jargon, the stock market simply gives us a chance to kind of hitch our financial wagons to the world's biggest companies, to effectively give them some of our money to fuel their growth in return for a tiny share of their business. Now, I'm not talking speculative tech stocks here. I'm not talking Wild West Bitcoin. This is backing brands such as Amazon, Samsung, Pfizer, HSBC. Now, timeframes are important because the only time we actually lose money is when we're forced sellers. So if you needed cash, say think back to March last year when markets crash, and you'd been forced to sell your investments at that time, you would have lost out. But longer term investors just put their earplugs in and rode out the storm. So younger people, think back to that professor and think about the low interest rate environment we're in today, and just make sure you spend as much time thinking about the risks of not investing as you do think about the risks of actually investing. Now, I personally invest for my kids in junior ISAs. It's the one time as a mum when I actively seek out risk for my kids because I think it's the best thing I can do. Now, just a few words on sustainable investing, which has really sort of risen as a trend over the last 12 months. In the past, if you think about what an investment analyst did, they would pore over numbers from company accounts. They would look in the rearview mirror. How did this company do in the last 3 months? Sustainable investing is actually future looking. It's about considering a broader suite of things which allow you to forecast how a company might do over the next 3 decades, not just how it's done over the last 3 months. So here's some examples. Why would you back a car company that had no decent electric strategy if you knew they weren't going to be able to sell new petrol cars in, say, a decade? Why would you back a firm which treated its staff poorly and was a candidate in waiting for a class action? Or why would you support a poorly governed company whose CEO was running a little out of control or tried to cook the books or give themselves a whopping pay rise? And all of that aside, more and more people are simply saying no to funding the ongoing destruction of our planet with their ISAs and with their pensions. Now, our research confirms that it's younger people in particular who care about sustainable investing, and they actually have the collective power to move the dial. There's £10 billion sitting in child trust funds in the UK today. £1.6 billion of that is set to mature in the next 12 months. Money talks, and that could be a very powerful tool. I hope these thoughts have been interesting to you. Any parents or grandparents listening in, struggling to engage their children with the world of investing, I have a tip I learned by accident when last year I lost the online password to my son's trading account. I could find my daughter's password. I got in, I made the changes to her portfolio. At the end of the year, she had done 8% better than my son. I'd made some particular investments in emerging markets, which happened to do quite well, quite a spicy way to invest, admittedly. But when my son found this out and he saw that 8% difference, my goodness, I've never seen anyone learn so much about emerging markets in such a short time frame. So parents and grandparents, sibling rivalry certainly exists, and it was the boost my kids needed to get interested and get involved. Thank you for listening. My name's Holly Mackay. Enjoy the rest of the AGM.
Well, I hope you all found Holly's presentation as interesting and thought-provoking as I did, and I'm going to go away and make sure I have all of my passwords to hand. So I can confirm that the voting process has closed, and including the results of the votes cast in advance of the meeting, I'm pleased to report that all of the resolutions were passed today by majorities ranging between 93 and 99%, including all members who voted either before the meeting or during it. You can look at the results of the votes on each resolution if you'd like to, as we close the meeting and up until noon today. We'll also be publishing all of the results on our website from Monday, the 7th of June. The formal part of the meeting is now closed, but before ending, I'd like to thank again all members who've taken the time to vote on this year's resolutions and to submit questions and comments before and during the meeting. I hope you found it interesting and the presentations informative. And I'm now going to bring the 2021 AGM to a close with another opportunity to watch our Inspiring Better Futures video if you didn't have a chance to have a look at it before the meeting started. And finally, in parting, I just want to take this personal opportunity to wish you all a safe and relaxing summer, and thank you again for all of your support for our society. Thank you.
How One Family is investing in a better tomorrow. We're owned by our members for our members, so we can reinvest our profits to benefit them and the causes they care about, rather than paying shareholders. Our vision is all about inspiring better futures by fostering financial resilience, improving access to education, and enhancing life opportunities, which is why we provide funding to support our members and communities that need it most. Since 2015, we've donated over £4 million. Over 350 fantastic causes have benefited from our support, including homeless charities, food banks, schools, and many more. We've improved the lives of over 3,000 people through our individual grants. And we believe that education is a key foundation to unlocking future opportunities. So, we award young persons education grants to help towards the essential costs of learning, and donate laptops to local schools and community groups to support education and provide online access. We also work with local charities to provide mentoring and apprenticeships, creating opportunities for people to develop their skills. We have a long history of growing and protecting value for our members, ensuring they have their say in key decisions, providing extra support for those who need it, and offering products with low minimum contributions, so they're accessible to all types of savers. Our colleagues are important to us too. We're committed to their well-being and development, actively encouraging them to be themselves. From promoting our diversity and inclusion strategy, to working together to support Brighton and Hove Pride each year. Ensuring our colleagues feel supported and listened to means they can do their best by our members. We're all individuals, and we share the same planet, so where you decide to invest could affect us all, now and in the future. At One Family, we're committed to helping you find a home for your money that's sustainable for everyone. How? By developing products that responsibly contribute to building a better world. Investing in things like climate-friendly funds, which are more ethically and sustainably focused. And with over 45 years of experience, we're experts in family investments. We like to remember that we're part of a much bigger family, which includes you. One Family. We're better together.